Hello, welcome to Wednesday. I think the 9th of April. I want us to look at what we are really expecting this Thursday, though we are having FOMC during the PM session, the New York PM session around 2 p.m. New York time. So let's see whether we can have something before then. But I'm not really interested in having anything because I really want FOMC and CPI to pass so that I might try to look for positions. So I'll get some clarity after the FOMC and specifically the CPI have passed. So tomorrow at around 9 a.m. New York time, that's when I think I will be more focused into looking for trades. But as of today, a really quick one to see also because getting to do these helps us to get better and also familiarize ourselves with these news events, right? So from the chart, you can see this is the weekly time frame, and we had already dropped to that monthly IR. Let's get to the monthly time frame. What you're seeing is you can see we had that nice overlap over here. Let me align it first. So as price really, all right. So we haven't really stung. All right, let me ensure that right there. Yeah, because at that moment in time we haven't really created that monthly IR, but you can see we were in close. If we have it at that point, we can see that it has been touched, but not yet really been traded into. But if we go to the weekly time frame, what you're noticing is that the market has already tapped into the 50% of the weekly fair value gap, of which we did a reverse going higher. Also, if I need to align this weekly fair value gap from the top. Oh no, all right, at that level, yeah, we can see that the market did already tap into that 50% level. We did reject, and currently we are displacing above this weekly level, the previous week's low that I was really watching if I should be bearish. Remember, for me to have caught a trade going lower towards that low, then I wanted to see how price reacted to this low, and which at that moment in time, whenever we were trading lower, the market from the lower time frame was closing below that weekly low. And since currently we are displacing above, if indeed the market is going higher, then what can I target? If indeed the market is going higher, before even we reach the high of that week, then my next target should be the 50% of this long week, which happens to be this high. So I'll have the 50% at that level, which would be maybe my second target if first I decide to target this high or the opening price of this candle. So I can decide to have it at that moment in time. So I might have that as my first target, but we're gonna drop lower and then see how we can refine it. Currently, I'm not really maybe trying to say prices are looking bullish towards that high. Currently, what I'm doing is I'm trying to refine, if indeed the market is bullish, what could I target first, second, and then third. So this will be my first target. Then the black line above the previous month's high that had already been swept will be my second target. Then my third and final target, and not my final, will be the all-time highs, right? That week's high. But if indeed we're bearish, my target will be this candle slow, though it hasn't really confirmed, though we are reacting off a weekly key level, which I'm expecting a pullback going higher. So if we also try to use the fib level from this low that created this push towards this high, what you're noticing is price has already dropped onto the OTE level, tapped into the 62 level, and we are currently rejecting, which is a nice thing for us to buy. We need to see price drop to discount, of which we can buy. But my main key level, the previous week's low, which is a level I'm really watching to see how price react to that level for me to identify or predetermine whether we are indeed bullish or bearish. So if we drop further onto the daily time frame of the weekly fair value gap, what you can see is, if I can get rid of that, market did consolidate yesterday, tapped into that weekly low, which is also daily immediate rebalance. We dropped lower, and if indeed the market was to be bearish, then we don't have any reason to push back higher because no fair value gaps around that level, only these liquidities that currently are being swept. So to me, I was more of bearish other than bullish, but coming onto the charts right now, I think it's now looking kind of 50-50, but what we need is more confirmation, either going higher or lower. And the first target, as said, was to be this level. Remember, this is the first target. Let me have those targets dotted, right? Also this one to be dotted right there, so that we may distinguish them nicely. So the first target, second target, then the final target, which is the all-time highs if indeed we are bearish. So from the daily, we had confirmed a daily market structure, bearish market structure shift going lower, and since we had this fair value gaps over here, I indeed wanted to see lower prices, but at this moment in time, that's not what we are seeing. Is your pullback swept the previous day's high that we wanted to see being taken yesterday, and currently we are rejecting. We are also trading above this previous week's low, which is a key level, of which if indeed we start displacing with fair value gaps above that level, then I will try to be looking for bullish prices. And as of yesterday, the price action is into the key level. Remember, we had swept these lows. Price drop lower, forming bearish fair value gaps as well as disrespecting bullish fair value gaps. If we saw that, then indeed we want to see this fair value gap do their jobs. And what do I mean by fair value gaps doing their jobs? This bearish fair value gap, if I can refine it, this bearish FVG at that level, the 4-hour bearish FEG that had been created after disrespecting the bullish fair value gap, from which I've changed. This is the bullish fair value gap from this high towards this low. This is the bullish that had been disrespected with this candle closure. Below it, this candle closure formed another bearish fair value gap. So this bearish fair value gap was to do its job by price swinging into it and then dropping towards this low. But that one failed, and what you can see is price displaced above it, leading to formation of another fair value gap, now creating a market structure shift. We have above that weekly level, my key context area, what has been confirmed as of now is we have this clear market structure shift at that moment in time. Also fully confirmed when this candle closed above that level. So also to me, we have this order block that has been created, a clear market structure shift, though now we're having a bullish fair value gap at this moment in time. We have that 4-hour bullish fair value gap, and this was my target as of yesterday of this level. You can see has been met today, but yesterday, due to the various mistakes that our price didn't show to us, I was kind of trying to journal this one, and I think I could have done some mistakes because I was punished with DXY. I didn't really look into gold, but what I was expecting as of yesterday didn't happen, but has happened today earlier on. Since we're having this fair value gap, and as well as we have another 4-hour fair value gap at this moment in time, which to me currently is not a breakaway gap, because a breakaway gap is this fair value gap whereby we have a candle closing expansively. So if you have an expansive candle like this candle from 1 to 5 a.m., it means that from the lower time frames what you're seeing is fair value gaps that are being respected. But whenever because it had already closed above the second candle's high, closed expansively. But this one, what you can notice, rallied higher, swept those liquidities, and we are retracing back, closing below the second candle's high. So it's kind of a retracement candle, so which is high probability that we can react off that. So for our FEG, so we have that one there, which could be traded into. Also this one could be traded into, but it's low probability because it's a breakaway gap. But because of the FOMC, that's why I need really to be very careful and maybe avoid trying to look for a position today. So this fair value gap isn't really not yet confirmed, but with the 17 minutes to go before this candle closing, I think it's possible that we do not see price creating an immediate rebalance or rebalancing towards these candles high to create an immediate rebalance, but will form a fair value gap around this point in time, of which I'm expecting a retracement into it, then an expansion, maybe target this high, then maybe quick one in, quick one out to avoid FOMC getting us on the way. But also if we tend to see lots of consolidations, it's better to avoid, which is what I'm really expecting to see. So with my first target being this will be my first target, then my second target at that moment in time, then later on we can expect to see a price pushing to the all-time highs. But for now, really chilled, really waiting, and more specifically waiting for the FOMC to get passed, then see whether we can align also before the NFP. So we have seen the previous day's high, a major liquidity pool. We are experiencing some resistance of that level, and in the next 16 minutes maybe drop. And since we have lots of fair value gaps, this fair value gap was respected, price pushed, and we have a small fair value gap here. So that's what usually FOMC maybe trading against the buyers. Whenever we have a FOMC, we tend to reprice into small fair value gaps that we couldn't actually see. Then price tries to reprice higher. So 30 minutes has no fair value gap, but 15 minutes you notice we have these fair value gaps at this moment. So what FOMC sometimes does, retraces into those fair value gaps, and then we go on with the right direction. So that's what I'm expecting for gold, but possibly after FOMC has passed, and if we see a break through this previous day's high, that's what I will kind of expect going higher. So of the previous day's high, we can expect a continuation going higher, but if we see lower time frame displacement of these 4-hour fair value gaps, we can engage. Also, if we tend to look at DXY yesterday, we were chopped, but with the trade was a good maybe trade. I wasn't really patient, so this is my journal that I wrote. I need to know not every day is a trading day, and if I have a key level I'm watching, I should wait until price delivers to that level, because I was watching a given 4-hour level, but I deleted it. I think I was watching how price would have reacted towards this low for me to react bearish, but I got myself being involved around this area, and I got punished for that since price retraced towards those highs, sweeping major liquidity pools, and as well as sweeping the 4-hour high that didn't create a rejection of the 4-hour fair value gap. So this is the 2-candle rejection that I mean. Whenever we want to see price reacting off a fair value gap and we see a candle closing so heavily, so what we want to see is price maybe sweep the 4-hour, the candles inside the fair value gaps high, then continue lower, which is what happened yesterday, but already could have taken. My first target was met, and having the direction right is first of all a great win for me. Even though the results weren't really good, I got that right. The direction part of it was gotten right, but the execution, that's where I fumbled. And so today, what I'm really expecting, but I want to avoid the FOMC news, right there, my journal as of yesterday. What you could see, I want to get rid of that. Price reacted into that weekly fair value gap as called earlier on. Also, we were closing below the 3-month low and the monthly low, then we broke lower. This is the level I'm expecting the market to reach. So we have a clear target. So we want to align around this area before the market rallies towards this low, also towards this weekly fair value gap. So of the 4-hour time frame, what you can see is we are having this fair value gap that is being respected, a 4-hour fair value gap. But also we have lots of these gaps over there that can be traded into. So we have currently the 4-hour FEG. You could expect the market to trade it. Maybe it has rated off, drop lower. So if indeed I'm bearish of that level, and to confirm this bearish order block, then what I want to see is displacement below this swing low. So if we have a swing low, a breakthrough that swing low, and a breakthrough, I will be considering the 1-hour time frame. If a candle closes below that low, going lower, then I'm expecting a continuation toward this low, because we have confirmed a market structure shift, a fair value gap displacement, want to see continuations going lower. And since we have these targets and expect to see price closing below that and see displacement with fair value gaps that are being respected, also creating this 1-hour fair value area, then I want to see a continuation going lower. And what I will target is definitely this previous week's low, as well as these fair value areas low liquidities. But until then, I won't really drop onto the lower time frames. All right, so we have lots of markups at this point in time. So until then, until price closes below that low, that's when I will engage going towards this low. And I think I can manage to have a good 1 to 2 by then. So what I'll wait for is maybe these. I need to have that alert. So hopefully I can get a quick in, a quick out trade before 2. So where do we have around 2? Yeah, there. So currently we are at 8, around 8. So a few hours before 2. So 2, 9, 2, 3, 4, 5, 6. We have kind of 6 hours before the FOMC news. If price could not have a displaced below that, then I won't be maybe engaged. But if we displace below that, I can look for an opportunity. So that's what I'm expecting for either gold and DXY. So gold is dropping. So I will be watching for a reaction of this fair value gap. And if I need to refine it further, an area I can watch for is these candles high. So already we have seen this market structure shift. So we have that prior candles high. If we have a candle closing above it, then I can maybe try to look a quick in and out trade. But until then, I have to wait for price to confirm to me with displacement. So that's what I'm expecting. Hopefully today we can maybe have, but we need to understand that if we don't get that trade, it's well, and not every day is a trading day. But also if we see displacements below these with fair value gaps, below the 4-hour with fair value gaps, not really will I try to maybe go with price lower. I'll not try to look for shorts in this scenario whenever the market looks kind of bullish, because sometimes when we are bullish, right, and we have a fair value gaps right here, you can see we had this fair value gap, but the market didn't even tap into those fair value gaps, right? But the market continued higher. Assuming somebody was shorting into this fair value gap, that's a direct loss. So whenever the market is kind of bullish, a good example is also below here. The market is forming fair value gaps, and also we retrace. We didn't even create immediate rebalance. We didn't tap into that fair value gap to continue higher. So I don't want to involve myself in trying to short in a bullish market. So I'll need to wait for things to align, going higher, then engage. So that is it. Let's wait for price, then we react accordingly. So until then, bye bye.